What's up, everyone? Today is October 12th, 2021. My name is Keith, and we'll be going over a bunch of different charts here looking at the crypto market. We'll first start off looking at the large time frame of Bitcoin, starting off with the daily, and then we'll look at the smaller time frames, looking at the descending zone that we broke out of and the current consolidation that we're seeing right now, just sitting on top of that 54.5K zone, which is the target for this descending wedge that we recently broke out of. We'll then move on to looking at Bitcoin, comparing it to the bond market in the US, looking at both the actual value and the yield of the 20-year treasury. And then we'll also overlay the DXY, which is the US dollar, on there as well. So kind of taking a look at the broader market as well as Bitcoin, noticing the similarities and the significant correlation, the positive correlation between Bitcoin and the S&P, which is like a risk on sentiment, in my view, in terms of the global sentiment, especially the US, which makes sense because it's the US index. But that's what we're going to get into. And then for the end of the video, we'll be taking a look at a bunch of different alts that I am looking at that look very promising if Bitcoin's able to continue the momentum. It does look like it's pushing very strong for the last few months here of 2021. We have seen in the previous market cycles a very strong end of the last 3 months, the last quarter. So if this is the finale for the crypto bull run, which in our view it is, I think there's going to be a very big bang here for the rest of this year and even potentially surpassing the end of December. So let's get right into it. We'll be first taking a look at BTC here. Let's pull out the quick screenshot. So we're going to be looking at this in a smaller time frame, but we broke out of this descending wedge here. We were contracting, consolidating, making a nice, well-respected series of lower lows and lower highs with a nice midpoint line right there. We were making 1, 2, and then 3, the 3 waves that we really like to be seeing within a structured zone, within a descending wedge structured zone, and then we get our very strong, aggressive, big pop right to that 61.8 range for the target that we're looking for, which is just basically the geometry of the structure that we broke out of. And then we really just made a swift move all the way to our target, which was 54.5K, this guy right here. So we went from, let's say, 41K all the way to 51K. We're consolidating at the 51K zone. We made another, or sorry, 54.5K zone. We made another push to the upside, and now we're holding the previous resistance as a new level of support. On a smaller time frame within this area right here, we are seeing a nice ascending wedge squeeze that is slightly pulling back a little bit more than I'd like, but it does look like it is going to move and continue to the upside, and we'll talk about that a little bit more in detail. On the larger time frame, before we jump into a smaller time frame, we do see the next key zone of resistance being at 60K. 1, it's a psychological zone. 2, obviously you see zones of sensitivity in the prior price action, and then you also see this structure's targets extension for the 61.8 level would be in line with the 60K zone. And you also see the first target for this smaller zone, the extension of the 0.618, is also in line with that 60K zone as well. And then we got the period of the 70, 71-ish K, and then you have the 80K, which is the final target within this entire consolidation. And we did talk about more in detail in the previous video how we were able to create multiple zones of confirmation at these key levels. So that's the overall large time frame. Our overall view is we are moving to the upside. We have this, you could call it a bull flag, from, let's say, 9.5K all the way to 64, 63K, somewhere around there. I don't exactly know what the exact top was. And then you see a nice pullback, a consolidation. You see a nice splitter right there, and then you're going to get that next strong push to the upside. You could also view it as a descending triangle where you get your first and then your second and then your third validation right here with your break, and then this is your horizontal zone of support, and then you can also derive a target from there and then extension from that break onwards. So that's how we're able to create multiple zones of confirmations at that periods where you get price discovery. You don't really have any zones to go off of in prior price action. You have to have some sort of method in order to look for potential areas of sensitivity where you've never seen price action go before, and this is our method. So now going on to a smaller time frame here. This is that strong push that we've seen If we go back to, let's say, the 6 hour, this is the descending wedge that we were breaking out of. And then we had two major targets for this descending wedge. The first one is the 50K zone, which was right here. We were squeezing with an ascending wedge right up against that zone, and we broke extremely aggressively to the upside right at that 50K zone. And from that point, it was a very quick move above the second target, which was the 54.5, 54K zone, which is this red line right here. And we see multiple zones of confirmations that this is a key level, and then you get the horizontal level of support, retesting, and creating the higher lows that were the higher lows that we're seeing right here. And then when we go and break it down on a smaller time frame, let's go to the 2 hour. You're seeing that ascending wedge form right here. So let's now go into the screen where we're able to make some drawings here. So this is the ascending wedge that we were talking about, and it was squeezing, forming very well in terms of the structure to the upside. We were able to break, and this was the validation that it was a break and retest, confirming the breakout. You did see an initial push breaking the previous high, but we did make multiple attempts by the bulls. You got the first attempt there. Now you kind of know where we are. This is that wedge that we were talking about, squeezing very aggressively to our first target, and then you got that break, retest, and then a continuation. That's the ideal scenario for an ascending wedge, and this did not, obviously, unfortunately, play out exactly the way we were expecting, because we were expecting this consolidation to hold. But when we are looking at it now in terms of the pullback phase, because this is your push, you're getting your pullback, we are seeing an expansion. We've seen a lot of these within the S&P. And we get our midpoint line there, and in our personal view, we have multiple points of confirmation that this zone right here, let's get our rectangle, this zone right here is a major zone of demand, because you have not only the descending zone right here, which is a minor support, you also have this previous ascending wedge, which is now holding as a new level of support. Still, if you're looking at it from a candle closure perspective, is a higher point than what we saw right here, what we saw right here, here. So you are seeing higher lows in terms of candle closures, which does indicate that there are buyers coming into the market, pushing the price back up because they're buying the dip, and you're seeing the candle closures well above a lot of the opens release for a lot of these candle closures. If you're looking at a lot of these candles, you're seeing lots of bullish engulfing candles, like that's one. That's a major bullish engulfing candle, which is extremely bullish. And then you also get the horizontal zone right here, holding as a new level of support. So at this point, in my personal view, you have a ton of buy pressure right here, and you have a series of lows, a series of higher lows pushing the price down. So you're getting a contraction within the price where you're seeing sellers drive the price further down, but you are seeing buy pressure keeping the price, forming higher lows from this structure right here. This buying is not stopping. You just saw an excessive push to the upside. They're going to wait for a pullback, and then they're accumulating right now within this dip. I'm sure a lot of people got liquidated who were just too leveraged up, and in my opinion, what we're going to be seeing from this point onwards is a break of this structure. We're currently consolidating from this resistance, as we can see right here. There's a lot of buy pressure where we currently are right here, so we might fiddle around somewhere in here, form up a little bit where you're getting some squeeze, maybe something like this, and then you're going to be breaking eventually to the upside, is my personal view. That's going to be my short-term view, because this is the 2-hour chart on BTC. I do think that there's going to be a tremendous amount of buy pressure at around 55.5K, and like I did say, the main level of the support within the consolidation is the previous target, which is at the 54.5K-ish zone. 54, let's say 54 to 54.5-ish K is the previous main zone of support that we're going to be looking at there. All right, so that's going to be the view of Bitcoin, and then we're going to be taking a look at the Bitcoin dominance. So let's zoom out here, and this zone around 45 we've been talking about for quite some time. It's the 61.8% pullback in terms of the Fibonacci from the initial push to the downside that we've seen from this ascending wedge. And how beautiful of a break is this? You saw from around the 59% range all the way dumping down to 40%. We saw the pullback where Bitcoin was able to slowly crawl back and gain its dominance over altcoins, although it didn't even break the previous high as we've seen when we are pulling back here compared to this one, but it has been slowly trying to recoup its losses. But this chart is going to go down even further than, in my opinion, the 39-40% zone that we're currently seeing as a double bottom. So the big question is, are we going to be seeing this zone again right here, which is the final zone that I think will hit? I do not think we'll go beyond that because altcoins are already starting to rally. A lot of altcoins are looking like they're just about to break out at this point. So I think, in my opinion, this is going to be the resistance that the Bitcoin dominance chart is going to. Even when Bitcoin fell from 65K to 30K, this was the formation that we saw. So breaking out of it, looking very bullish for Bitcoin that we just went over, I do not expect this to continue further. And let's just see if we get some sort of confirmation here within this hesitation. We saw a support. Let's just quickly talk about this zone using a print screen. Awesome. So we saw a hesitation here where you initially had some buy pressure hold up the price, and then it became sell pressure. You could really view it as a zone. It's not going to be absolutely perfect. This area right here, and just so happens to line up perfectly within the extension of the 61.8 there, or the negative extension there because it's going downwards. When you're flipping it up. But when you were looking at this zone, that's your first potential zone of sensitivity, and then you see this major high here, so you're going to connect the two, and now you have an unconfirmed zone. You're really looking for sell pressure here to confirm this major zone, and then you see that it is getting weaker with the pushes to the upside, where you get that massive dump, and then you get a contraction, you get another dump, which is arguably basically almost similar to this dump that we saw right here, just a much shorter version, because this was a minor push to the upside relative to the overall dump to the downside that we had. So it's making sense that it's not going to be nearly as impactful. And then you see this second push to the upside. You see first validation, second validation, and then we're looking for sell pressure within this third validation here, which is in line with the horizontal level of sensitivity, as well as the 61.8 extension that we can see right here, which is basically 61% of the push from the top here all the way to the bottom. It's coming back 61.8% of the whole move down there. So that's my overall view. I think it will hesitate at around the 45-46% range. We will continue to move to the downside, and we'll be taking a look at the altcoins, because there are a lot of altcoins that look very promising that, in my opinion, is just about to break out. I think we're going to be seeing the alt season that we saw back in the start of the year occurring for the end of this year, which is going to be looking absolutely phenomenal. So let's now move into the chart of Bitcoin compared to the S&P, as well as the US bond values and the yields of those bonds. So I'm going to get a little drink of water. Not really going to jump into BTC because we've already talked about that in the large time frame as well as the small time frame. So we're going to jump right into the S&P and then move on to the more traditional assets here. All right. So in terms of, in my opinion, descending wedges, the S&P beats out any other asset, really. There has been so many descending wedges that have broken to the upside for the S&P, and I think this is going to be another one of them. If you're looking from a large time frame, we saw a massive push to the upside, and if you're really looking, and let's just talk about it on a broader sense here, let's just clear everything away. This was a massive accomplishment for the S&P to break out of, in terms of the fear and uncertainty we have in the worst point of COVID. Obviously, there's a massive influx of capital through currency proliferation from the US government, and they were buying jump bonds, anything that they could get their hands on that would ease the market, and this is the reaction that we got. But if you're looking at it from the target perspective, you got to get the largest part. You're going to copy paste, and then you're going to bring it up to the breakout point, and this is going to be your geometric zone. You're using the geometry of the previous zone to look at potential zones of sensitivity, and that's going to be our first main target around 47.55. So we have not hit it yet. I do think that we will inevitably hit it. If you look at, other than the NASDAQ, if you look at like the Russell 2000, if you look at the Dow Jones, they're going to have this similar structure. The NASDAQ was a lot more bullish, so it doesn't really have this structure so much. It has higher lows. more so than the S&P. But when you're looking at it from a smaller time frame, let's get into it. This is going to be the main target. Let's go to the 6-hour chart. And then you have a previous major zone of resistance turning into new level of support. As we can see, lots of sell pressure, lots of sell pressure. It's going to be buy pressure coming into the market. You also see not so aggressive descent here where you're getting lower lows, but it's not absolutely insane in terms of the overall aggression. And then that would be 3 validations right there. And then you're able to get a very easy 3 validations right here as well. And then we can draw our midpoint line, which is going to be done with the arrow right here. And there we go. So that's the current structure that we're seeing. And then on a smaller time frame, let's just get the size of the structure, and then we're going to be looking at a potential breakout zone. So I would say it's going to be somewhere around right here. We see previous zones of resistance and support. So then we can look at potential zones of sensitivity on the way up. We could use our fib extension right there. Does not line up perfectly with there, which would have been ideal, because then we could say it's a confirmation with not only one structure but also the second one. But maybe we might form something like a ascending structure somewhere like here, and that would line up perfectly with the second one there. You know, something else could occur that would give it more validation, and that's what we're looking for. So in terms of what we're currently seeing right now, let's just take a quick peek like so. We are forming a well-structured descending channel. You could also look at it as a wedge like so, expanding in volatility. You could also look at it like that. So you do have a lot of buy pressure coming up here, and you can also connect like a previous resistance, new support, the classic line, and that's going to be forming your 3 zones of validation. We can see that right there. So in terms of a support, we've tested it multiple times. We've formed like a little squeeze right here, as we can see. A nice little squeeze. We were able to pop out of it, and now as long as we're able to hold this previous low, it's looking very phenomenal. You're going to get that structure where you're going to be contracting, and it's going to be winding up, and then you're going to be able to get that nice break to the upside, forming a great risk-on environment for the S&P. And the U.S. bonds, in my opinion, are looking very favorable to this overall viewpoint for, let's say, the end of this year. From now to the end of this year, I do think that the S&P is going to increase in value, and the US bonds, in terms of risk sentiment, do indicate that as well, and that's what we'll talk about next. So in short, what we're looking for is a decrease in the value of the bond for risk on sentiment, because you don't want to see investors rush into bonds, because as a very risk-off asset or financial instrument, where if there's fear, uncertainty, worry in the market, like during COVID, look what happened to bonds. They were even front-running it, as we can see, March, let's say 2018. It's just been absolutely monstrous, and this is a very significant structure that did break to the upside back in February 2020. That's obviously when it was just peaking at its worst. From there, we have seen a push to the downside, and it does look like we have broken the structure that we're currently in from around 151 to 145. Very significant push and breakout of the 145 range to the downside. We're now pulling back, potentially retesting that previous level of support as new level of resistance, but the overall trend does look like it is moving to the downside here. So I'm not really trading bonds or anything, but I'm looking at it as a risk sentiment indicator along with the yields, because those are negatively correlated with the actual value of the bonds. So we're going to be looking at those in a pair. So let's just take a quick draw here, and then we're going to be moving on to the next structure. You see a key level of resistance, key level of support. You were bouncing, you were range bound, and then you broke to the downside. You're getting a slight pullback. You're getting a very aggressive push to the upside. It'd be great if you did get a lower high, and then you're able to see that nice little squeeze, and then the continuation push to the downside would be the ideal situation for us to see. So that's going to be my viewpoint. Overall, it does look like there's going to be a ton of sell pressure here. So I am going to be expecting the value of the bonds to move to the downside, and we'll look at the yields, which are basically the flip of this, and they are telling the complete opposite story, which is a fantastic thing because it's just giving us even more validation there. So the actual yields, or the yields of these bonds, are doing phenomenal. They are moving to the upside, which is what we're wanting to see, because investors are demanding more yield because the actual currency is devaluing. It's losing value, so they're demanding more yield. Definitely just makes sense. So this is an indication that we are seeing inflation, but it is also an indication that we are seeing risk on sentiment increase as well. So it does look favorable for things like crypto, for the US equity market. That's why I think that we're going to be rebounding from our current level of support, breaking out of the current wedge that we're seeing right now. And this looks a lot more bullish than in terms of the overall view than if we just broke out of this zone right here. Because we had a fake out, and then we were able to come in because it did initially break to the downside, as we can see right here. But we were able to get a monster rally breaking above the zone, and that's really what we're looking for. And we easily broke out of this descending zone, as well as the zone of confluence, which would be like that, let's say 2% range, or 1.95. And at this point, we are making a very strong rally for the yields for the US 20-year government bonds. And this is just a sign, in my view, that it is a risk on sentiment for the overall market right now. And that's why there's more reason to be bullish for Bitcoin. And if we're taking all of these together at once, you can see how correlated they are. So let's just zoom out here for a second. Let's look at like the 12-hour, let's say. Actually, let's look at the daily. Zoom out a little bit. You can see the peak of Bitcoin right here, as well as the peak of the S&P line up absolutely perfectly. And then once you start to see that confirmation that the bond market is moving to the upside, where you get the confirmation of the actual value going down and the yields moving up, then you get the recovery for Bitcoin first. And I think once you see the recovery within the S&P, that is going to be the total green light that the crypto markets are going to be doing phenomenally well for the rest of this year. It's going to be a slightly bumpy ride, obviously. It's not going to just perfectly go up, but in terms of the overall trend, it is looking phenomenal. And for the individuals who've been patiently waiting from, let's say, like who got in at the beginning of the year, or maybe who got in during the slightly bearish time in the summer of this year, they're definitely going to be happy that they were holding their investment, I would say. So definitely going to be looking out for that one. I'm going to get a quick water break, and then we're going to be jumping into some altcoins here. I'm going to quickly move this to the BTC market. Just squeezing right there. All right, so we're going to be starting off with Ethereum because it is looking very phenomenal. It is, in my opinion, squaring up for a nice move to the upside. The story on a large time frame is looking very similar, but Ethereum is relatively stronger than Bitcoin because we've already basically hit the previous all-time high. We haven't hit the exact all-time high, but we were pretty close, much closer than where Bitcoin is compared to its all-time high. So relatively, Ethereum is at a stronger point, and it does look like we are forming up right here as a potential another level of resistance. But on a smaller time frame, we saw a very strong push to the upside. We saw our pullback, and now we're seeing our continuational structure break to the upside yet again. And then this is our midpoint that we can see is a level of significance right there, and then we are squeezing and squaring up for the next push, which I think will take us to the final target of around 42.18 for this descending wedge. And then we can use our projections like so, and then we can also extend our projections with this one and get the arrow. Gotta go from break to here, and also break to here, and this is the true zone, like so, because we didn't really fully break and form this until we started to squeeze and contract, so you would classify that as the actual opening of the wedge. And then we would get our fib. We'd go from the breakout to there, make sure it lines up, and you're going to be looking at around like the $5,500 to $5,800 zone for Ethereum for the next major level of resistance. And that's how we're going to be looking. Like you'd want to really zoom in, but it does take a little bit of time to make sure they're very, very accurate. So that's the overall process of how we view potential targets. So looking on a smaller time frame here, we saw a nice descending wedge. We are now squaring up, and let's draw in our squeeze that we can see right here, and also our higher lows that we can see right here. And now we have a very well structured symmetrical triangle. Let's get our structure, and then we can say that's the height right there to the high. And then we'll want to get where it's going to break out. We'll obviously want to adjust when we actually see the breakout occur, but that would be probably a pretty good spot, as that was a previous major zone. So we go like that, and then we get our zone, and then we can see the previous zone right here lines up with this zone pretty well perfectly. So this is a major zone. The 4180 is going to be an extremely key level, and I don't know if that was the exact high. Let's take a look here. Pretty well the exact high, not exactly, but we can see it also lines up with a key level of sensitivity on the daily chart, because you see the candle close just at that level. You see the wick, and then you see it slam right back down. So the zone around 40, let's say 200, is going to be a major zone of significance for Ethereum in my personal view. But on a smaller time frame, it does look like it's squaring up really nicely. What we're looking for at this point, let's just do a quick draw here, is we see our first major impulse, we see our second major impulse right here, and then we are seeing our third major impulse occur, and then you could see a nice little squaring up like we can see already occurring from the higher lows, but even more aggressive series of higher lows. And then once you break that zone of confirmation and confluence, where it's potentially going to be around like 3,600, that's where you can really start to see the price start to move to the upside, and you're going to be hitting zones of sensitivity. But the next major zone that I'm looking at is around 39 for a potential target, and then from that we'll be looking at next targets onwards. But in terms of smaller time frames, right now we're looking to break around 35.50 at this point right here, and then the target's going to be around 39. So that's going to be my view of the S&P, or of Ethereum, sorry. And then we'll be looking at the next chart, which is going to be Cardano. Cardano has been slightly lagging behind, which is kind of surprising because it has been a front runner for a lot of the early boom in 2020, for 2021 here this year. Although it does look like it's consolidating, we did see a slight consolidation within the previous descending wedge that we saw for Cardano, which was this one right here. We saw a little bit of hesitation. It was just slowly crawling up, and once we broke our zone of confluence, it just absolutely rocketed higher. And it's kind of like we're seeing right now, where we're seeing a lot more hesitation. I'm surprised we broke the previous low right here, which was a little bit of a shocker. I was definitely, let's say, surprised to say the least, but it is holding its own as long as we're able to hold this previous resistance as a new level of support and not break this series of higher lows, even if it's going to be taking its sweet time coming all the way back down to around exactly $2. As long as it holds that $2 mark, holding this previous low, it is still looking bullish in my view. It's just really taking its sweet time before it is going to break, but I do think it will break, and once it does, it will be seeing maybe not as aggressive, but a lot of buy pressure, because it is recently creating a new platform for developers to build on with their smart contract implementation, which is fantastic after how many months of them talking about it. So definitely good for them. There's a lot of innovation in this space finally after many months. So it's definitely something to look into, but not yet really for me to say that it is a potential breakout opportunity that should be actioned quickly. I think it's something to be on the back burner for a little bit here. What isn't on the back burner is Binance Coin and PancakeSwap. absolutely looking phenomenal. Binance Coin is definitely leading the charge. It was able to break out of its descending wedge. There was a massive triangle that broke to the upside. It just absolutely continued with no real pullbacks. We had a very significant drop here. This is when Bitcoin was at its point of like 57K around, all the way down to around 30K on that big dip. That's the consequence of Bitcoin moving to the downside. Binance Coin wasn't able to hold its own compared to some of the other altcoins, making lower lows and lower highs, although it was very structured. And then we saw a very aggressive break here from Binance Coin, one of the few coins that were breaking out well before the majority of altcoins. And then we saw a pullback validating a previous zone of significance as a new level of support. And then we're continuing to push to the upside here. And then if we're just taking a quick peek at the target here for this structure, getting the size of the opening, looking at the target we can see right here, which lines up with the previous high, which makes sense. And then we just get our zones as we can see. Previous high was 700 or 688-ish, and then next target is potentially, let's say 754, and then we're going to get some sort of structure that we'll be able to look at for the next target, as we can see. So that's going to be by next key targets, with the midpoint at around $600. We can see that was a major zone of both resistance that turned to support in the prior price action. If we're taking a look at a really small or really large time frame, that's going to be probably a perfect candle closure, pretty well to it, as we can see right there. So it is looking pretty phenomenal for BNB as well as PancakeSwap, which we'll take a look at next. But the next zone that we're going to be looking at for a level of resistance is around $500, which is a technical zone as well as a psychological zone. So it is looking very favorable, as well as we've already broken the previous high right here at October 6th. And we're increasing lots of buy pressure here coming in. On a smaller time frame, just absolute monster candles and just such high relative volume, as you can see, relative to the previous candles we've seen all the way for the past multiple months here, since that big dip moved to the downside where Bitcoin went from mid 50Ks all the way to 30Ks. So just a tremendous amount of buy pressure coming in for BNB. And we can see Cake do something similar. As we can see, Cake is right here. Cake has yet to fully break out and break the zone of confirmation in Confluence at around $20 there, but it is just about to. I think Cake is looking very promising for a potential breakout right now. So I did talk at the very beginning of the video that there was a few altcoins that look like they are very promising, and Cake is one of them. Some I think will break out in time, like Cardano, and BNB is a little bit too late, but I think Cake's one of the ones that, if you're looking for an opportunity, you have a little bit of cash on the side. Auto Cake Farm, obviously is an extremely lucrative investment to be in. Obviously invest what you think is a reasonable amount with the risk tolerance that you have with that financial instrument. But also appreciation. This does look like it's phenomenally set up to break out to the upside, as we've seen previously. So looking very phenomenal for PancakeSwap. One of the things I did actually do is buy some Serum, which is this guy right here, which is a decentralized exchange on the Solana network. It's the first one with a automated, basically like a order book view, very similar to a centralized exchange. If you know what an order book is, it is a flashing of buyers and sellers within a price range, and it shows you the volume of either buyers or sellers within that price range, which gives you some information for the participants in the market, which is a very key thing to understand, especially if you're short-term trading. So it's a very great tool if you are trading, and it's the first DEX, not even just on the Solana network, but in the entire DeFi ecosystem, that has this centralized type of order book system, this order matching system, which is absolutely revolutionary in my view, and that's why I think this is a really good opportunity. But when you're looking at it from a technical level, it has been a little bit soft since the break of this wedge, of this contraction and volatility, but it has been able to hold this previous zone. That's all we're really looking for, is for it to hold that previous zone in order for it to still be a valid breakout. If it does break this zone, we'll have to reevaluate, we'll have to recalibrate. But as of right now, it does still look very promising, and we could still hold that previous zone. As we can see, it's still forming higher lows. We can just draw a nice little previous series of higher lows connecting on a trend line, and you can see it's still looking very favorable. And getting in at like 750, I think, is a really good dip buy opportunity, which I already actioned. So that's definitely something to keep on your radar. The other things in terms of the DEX options in the Solana network doesn't really intrigue me too much. You got like REN, you have Radium. They just remind me of like Uniswap, where you just have an exchange where you're able to buy and sell, but there's no real additional information. Serum is definitely a very unique project that I think is, as long as the market values the centralized exchange's order book, which all stock markets, all traders look at the order book, or at least have an order book open there to look at, especially if you're short-term trading. So it is an extremely vital tool for short-term traders. So I think if the Solana network is going to increase, which I do think it is, it's going to be something that people steer more towards, because it's just information that's available that you wouldn't get in these two other options there. And also they're backed by FTX, which is kind of similar to the PancakeSwap getting backed by Binance Coin, where PancakeSwap has major dominance in the BSC network ecosystem in terms of DeFi. So I think Serum will potentially get there, and I think it's a really good opportunity here at around $7.50. So moving on to the next series of tokens here. Let's talk a little bit about XRP, and then we'll talk about Luna. Did look very favorable, pulled back a little bit, but Luna is something that I have been filling my bag up a little bit with as well here, a little by little. Not something that I'm got a bag that I'm happy with, but slowly adding little by little, looking pretty favorable. So kind of first talk about XRP. I haven't added on my XRP amount in a very long time, but when you're looking at it from a larger time frame on the daily, it looks very, very solid, where you're getting a descending zone, ascending zone, squeezing the price into the apex at around $1.2. And when you're looking at it from a target standpoint, you got $2.80 as well as $3.60, which are the top main targets, with some minor zones along the way. And when you're looking at it within the symmetrical triangle, you have this first descending zone that was very descending, very tight, but it was still holding. And then you got a very solid breakout, which is absolutely moon compared to a lot of different altcoins. You saw XRP actually hold its ground relatively well initially. You saw a descending zone, and then although it's not pumping as much as let's say some of the other coins, it is holding its ground really well, forming a solid structure, forming higher highs and higher lows, and it's doing relatively better than things like Cardano, than things like a lot of the DeFi Ethereum networks. If you're looking at Aave or like Comp, SushiSwap, they aren't doing nearly as well, since I think it's mainly because of Ethereum gas fees, but there could be other factors that play as well. So looking at XRP back again, does look very favorable. First major target's going to be around that $1.40 range. That's also a major zone of resistance for this large structure, so it is lining up well. If we're taking a quick brush, breaking out of this zone right here, you're going to hit the main target, which is this guy right here, around $1.39, $1.40. And this is also a zone of confluence for this descending zone. So you're getting your first big target, first major zone, I guess you could say first zone, second zone, and then you're also getting the third final zone. It could be a very small pullback, and then you're going to get that breakout that you're looking for, and what a lot of XRP fans are looking for. So that is going to be the viewpoint that I have on XRP. It's looking like it's setting up absolutely beautiful. It is looking like the $1.37 to $1.40 range is going to be that major zone of resistance before we start to get that momentum kicking in for XRP. So once it breaks that, let's say $1.41 range, $1.42 range, I think it's going to be carrying a lot more momentum to the upside. All right, a little bit of discussion on Luna. It did look extremely favorable above 42, but now it pulled back to around 37, so it is looking a lot less favorable. It was on the list of potential pushers, but it is contracting here, and as long as it's holding the descending zone, let's just get a quick draw of the brush. this descending zone as well as this descending, this descending zone as well as this horizontal zone. As long as it's holding that major support there, I'm very happy with it, because it could form a nice little bottom and then start to trend up, and then we could form a nice ascending zone right there, and then a key level of resistance, and then you're going to be forming, contracting, and that's going to get you the power to break out of this current resistance just below that $50 range, which is a major psychological zone. So that's going to be the expectation for Luna, is for us to be seeing that nice higher low formation from this zone here. And it could drop a little bit further. I'm not going to be too picky. This is the major zone that I'd like to see hold, which is the previous resistance turning into a new level of support. And ideally, you'd like to see higher lows form within this zone right here to start breaking to the upside there. If it does break the 36 zone back down, definitely not looking as favorable. I would then be hesitant to really look for any leverage trades, or expect that it is going to significantly appreciate in the near future. So that's going to be the break point where I have to change my viewpoint and change the decision and outlook that I have for Luna. All right, so let's look at some other stuff here. Not really going to jump into anything on there. I think we'll take a look at Binance coin we looked at. We'll take a look at DOT, which is the last one here. Polkadot is already looking very favorable, doing very well. We were seeing a previous resistance turn into a new level of support. Can I get a little drink of water here? And at this point, this previous zone that we were talking about as a major level of resistance over and over has actually come to fruition. And then we can take the size of the symmetrical triangle, overlay it to the breakout point, which was right around there. And then we draw this right here. So the next main target is going to be around 46, and then we can draw potential zones above it. I would say that would be a pretty major zone. 1, 2, 3 rejections. So you see 46.60, first major zone. You're going to get some hesitation, and then the next target area is around 56. And then if you're looking from a larger time frame, you do see 3 valid higher highs connected by an ascending trend line, which is also going to provide some resistance. And you could really tweak it a little bit if you wanted, depending on where that price is. Ascending trend lines that are so far away, you do have to find other zones that are going to validate a zone nearby around that price range, because if you're expecting that single line to give you a confirmation or not, it's going to be looking a little bit iffy. You need to have more than one confirmation if you're going to be using a structure like that far away. So looking on a smaller time frame, let's look at the 6 hour here. Like we talked about, we already broke this major zone of confluence. We pulled back, retested it for a new level of support, as we can see right here. Looking very solid, and then we had a very aggressive break. Look at that strong bullish candle, and then we were able to hold this previous resistance as a new level of support, and it does look like it's forming something very similar. I'd say that's a little bit too descending. It would be great to see something along the lines of that, and then you see a slight contraction if it does hold like there, and you get a slight pullback, and then you get the ramp up for the next push to the upside. So this is looking very favorable. If you do break the $32 range, definitely got to be a little bit hesitant there. But as long as we're holding this structure, even if it forms lower lows or lower highs, sorry, it does look favorable, because that's what you were looking for contraction in the market. You can't have higher highs go on forever. It's good to have these structures where we're getting a series of lower highs, because that means contraction in a bullish push. So that's going to be my view of the overall crypto market. I think PancakeSwap is looking very phenomenal. Cardano does have a little bit to go. Ethereum breaking the 35, let's say 3570 to especially the $3,600 zone looks absolutely awesome for a possible entry. And that's going to be a personal view. Serum, like I said, has a lot of good fundamentals. Don't exactly know off the top of my head the tokenomics, but definitely check it out if you haven't already. Thank you very much for tuning in for this week's crypto market update. If you do want a particular token to be looked at within these, don't be afraid to write them in the comments below. If you do find these useful, informative, educational, it would mean a lot if you give it a thumbs up. And subscribe so we know to continue making more videos like this. Thank you for tuning in, everyone, and until next time, have a good one.